All right, everybody. Well, hello, good evening, good morning, good afternoon, whenever you happen to be watching this, and thanks for joining us. It does happen to be evening for us. I'm here with the Mercenary Geologist himself, Mickey Fulp, and Carl Boyd. Mickey, how you doing?
I'm doing well, John. Carl, good to see you guys.
Hey, Mickey.
Carl's just on audio with us tonight, but he's with us visually in spirit.
We know what he looks like, so
yeah.
We're not missing anything by looking at his mugshot, right? So
I'm better looking this way. Nice to be with everyone.
I got my glass of whiskey, so I feel nice and relaxed. It's nice night to talk stocks and commodities and craziness in the world. Let me tell you, Mickey. I want to get your opinion. I'm sure you've been following it. What do you make of the whole, WallStreetBets, Gamestop, all that stuff that's going on? What do you think?
Well, I guess I'd say it's about time this happened. And we've been, I know you guys are involved with Save Canadian Mining, supporters of Terry Lynch and that effort, as I am. And this isn't even naked short selling. Because that's basically illegal in the United States. It's legal in Canada, but the real travesty of this is there are shorts out there, or there were shorts. I don't follow it on a day-to-day basis. 140% of GameStop's outstanding shares. So not only were the hedge funds shorting this, they're reshorting. So supposedly they have to have shares, borrowed shares lined up before they can do that. So it's really exposing what we all have known has been happening for years and years in the markets. And I hope they bust it, because it's just pure market manipulation. And the fact that Senator Ted Cruz from Texas, arguably one of the most conservative members of Congress, is on the same side as AOC on this issue, indicates that something may happen, that something might get done. So, it's a big boy football. Wall Street, New York Stock Exchange, all for that matter, all three indices in New York. And it's refreshing to me that the little guys are maybe able to make a difference here and get some stuff changed. It really is just criminal.
Yeah. The power of social media.
Yes, sir.
What do you think? What do you think about the reaction today? Like, I know a lot of the brokers here in Canada, the discount brokers, like people couldn't get into their accounts. And then, of course, Robinhood was shutting down trading. You couldn't, on certain stocks, you couldn't buy. Like, what do you think of that? That really was like blatant, manipulation, in my opinion. Do you have any opinion on that?
Well, absolutely. That was blanket manipulation, and it's Robinhood, who, I don't know what it's like in Canada, but certainly I can't turn on financial TV and watch for either of the three big business networks here without seeing an ad for Robinhood with some 20-something sitting there on her phone playing the stock market through Robinhood. They're advertising to these people. So Robinhood turns around and blocks a bunch of its users, which I don't know that much about it because it just happened today and I haven't really researched it. But that seems criminal to me, too.
It does. And, Robinhood, in my opinion, sold out big time today because, obviously Follow the Money leverages social media for, online communities, and we've brought people together there. And Robinhood has a really big name and brand, and they have big communities on Facebook. And, I think a lot of retailers clearly, obviously, support that. And to lock them out when retail was really fighting back and coming up with their own ideas, I think it's really fascinating because even with hedge funds and, really, they're just, it's organized money that really you have a few thought leaders, and then other hedge fund managers follow them. Well, it's the same thing with online communities, right? Online communities, you have thought leaders within these communities, and people sort of trust certain people, and they come up with these ideas of, hey, maybe we should look at this stock, maybe you should look at this stock. I'm not going to make a recommendation, but this is what I'm doing. And then they put their due diligence. And some of these thought leaders in these groups, their due diligence is absolutely fascinating and arguably better than hedge funds. So go and do that today was, I think, absolutely a smack in the face.
Well, I couldn't agree with you more. So, you know, when I heard about Robinhood and that today, and then kind of following it, not closely, but enough to know what's going on. And I'm sitting here listening to you talk, and I'm thinking, you know, this is kind of similar to what happened in a totally different ball game. But what was it? It would have been in 10 years ago, this time, 10 years ago. Remember the Arab Spring and how many dictatorships fell in the Middle East during that period of time? And that was all done through social media. And so that tells you the power of the people, the power of the little guy. The problem we have now is that social media has become an oligopoly, and it's starting to censor all views that it does not deem appropriate, perhaps, or all views that do not support the platforms of Amazon, Facebook, Twitter, etc., Google. So that's really scary. But this movement kind of reminds me a bit of the Arab Spring, and I remember that time very, very dramatically, because that's when the markets were really rolling at the same time. The Toronto Venture Exchange had its second highest ever on February 28th of that year. And anyway, uranium went through the roof for a while before Fukushima. So
it was just before Fukushima.
Yeah, right. Yep. So anyway, regardless, we live in interesting times, my friends.
What do you think? Do you think it's ironic that, you know, Robinhood, the old rob from the rich to give to the poor, and now has become the, you know, blocking the ability of the small guy to take on the big guy? I just thought it was a bit ironic. Yeah,
absolutely. It's
so. This is what came across my desk today. It was a comment, apparently, supposedly from a Robinhood employee, that said Robinhood management received a call not only from the White House but Sequoia Capital asking for, you know, basically demanding that they halt the ability of people to trade in stocks.
Yeah,
I don't know if it's true.
I'm sure that happened. I don't know the hedge funds, but Carl's point earlier was very well taken, and that's the hedge funds are sheeple, just like the little people are sheeple, you know. And I talk about sheeple all the time. Don't be a sheeple. Don't follow the rest of the herd. But hedge funds are the worst example. Not only are they billionaire hedge funds, but they move en masse. They move in a herd, and you're seeing it right now. Look at the price of copper. Copper's at 8-year high now. I'm gonna look at my board here right now, and copper actually took a 10-cent fall today to 347, but it needed to consolidate because it's gotten way ahead of itself, especially considering the supply-demand equation. Supply is off, but you tell me that this economy is going, unless the only way it's going to need more copper in the coming years, there's massive stimulus, infrastructure build out, not only in China, which is going on, but U.S. too. But you know, it's the reason that copper has exploded over the last 2 or 3 months is solely because all the hedge funds piled in on both sides of the Pacific. In China, all the speculators piled into copper futures, long copper futures, and the same things happened in the U.S. Hedge funds are all in on copper. How long is that going to last? Till they get burned at some point, and then they'll all pile out, and they'll be massively short copper. They operate like sheeple, just like retail. And I don't mean to bag on retail investors, but kind of like those people that are playing Robinhood, $5 Robinhood stock bets on their phone. They have no idea what they're doing.
But a bunch of them all acting together put those hedge fund guys in a bit of a squeeze.
Well, and you're exactly right. All I'm saying is more power to those little people. But if anybody thinks the hedge funds are smarter than the average Joe, they're not. They operate the same way. I guess that was my point.
Yeah.
Except they're 100 times bigger, or 1,000 or 10,000 times bigger than the collective that even is in buying, day trading Gamestop on their phones right now.
Until they got banned from they couldn't buy or sell anymore.
Yeah.
We'll let the big guys buy and sell, but you can't do it anymore.
Exactly.
Just the hedge funds can trade now.
Yep. Anyway, let's go on to something else, huh?
Okay. How's life in New Mexico treating you?
It's a nice winter time in New Mexico. It's been pretty dry here. We need more snow, but in the pandemic paranoia and panic that we are still in, it's kind of nice to be in a semi-rural environment on my hobby farm. So, and the winters are pretty nice here. You guys would think it's absolutely balmy. It was about maybe
no doubt
5°C today here, but and it might get down to -5 tonight. A little bit of snow on the ground, but every once in a while with 10 or 12-degree days, and then it comes and it snows again, and it stays below freezing for a couple of days, and we're right back out of it. So,
yeah, it sure beats -40. I'll tell you that.
Yeah.
What's your favorite gold chart rate?
Go ahead, Carl.
I was just asking, Mickey, what's your favorite gold chart to look at right now?
Well, I'm going to tell you what I'm working on right now. And one thing I noticed is that gold, for the most part, has made lower highs and lower lows since it hit the all-time record of 2063 an ounce London close on August the 6th. So that's not a very good chart. And I was reading Kitco, and I got to give some props to Kitco. They sponsor a couple of my podcasts, my weekly podcast, and then my monthly Commodities show. And I was reading Kitco the other day with a guy who contributes. Gary Wagner is his name. And he made this comment about how the 2-year chart for gold in 2010, 2011 is the image of the 2-year chart of gold from 2019 to 2020. And we have this massive database. And so I go, well, I'm going to look at those charts. So we made up the charts, and you could lay one over the other, and pretty similar. One, the occasional spike up and down. But then the point becomes, and this is not my idea, but we're going to run with it, and I'm going to post it on Monday. Look at what happened from 2013 through 2015 to gold. And the question is that going to happen again? And I'm not going to say it's going to or it's not going to. There's lots of macroeconomic reasons to think it won't happen. And I'm no chartist, I'm no technical analyst, but I do pay attention to those sorts of charts. So we'll publish Monday Morning Musing from Mickey the Mercenary Geologist. It will come out to my subscribers on Monday, and explore this idea.
Yeah, I'm actually looking at those right now.
I can
Mickey.
tell that you're doing this.
Yeah.
John, I'm watching you look up on your screen. I can tell you're looking at charts.
So those are pretty close. You're right.
They certainly are they not?
Yeah, they're pretty close.
And so if you can pull up the chart from 2013 to 2016, look what happened. Uh-oh.
Yeah, hopefully not.
And that bottom right there is going to be in mid to late December of 2015.
Yep.
Yeah. So it could be a harbinger of things to come, my friends.
So
I hope not.
I hope not too.
But,
now with that,
you have to, in this business, the only thing you can go on is what happened in the past. So I'm a very strong proponent of the idea that past is prologue. So not saying it's going to happen. I hope it doesn't, but charts are sometimes tell a story.
So how are you positioning then? Are you kind of out of reducing your gold exposure?
I have been reducing my gold exposure, which is gold exploration stocks, the riskiest market, Toronto Venture Exchange on the planet, but also potential for the highest rewards. I have been taking money off the table, taking profits since mid-May. When that feeding frenzy really started, I go, this is the opportunity when stocks that I've been underwater on for a long time get to break even. I'm moving that dead wood out. I'm going to take profits, and I've continued to take profits and sell into a bullish market until that kind of went away. And the market's peaked along with gold in August, but that doesn't mean that sequentially the stocks peaked at the same time. But I'm still taking money off the table when I have the opportunity right now. I'm very heavy in cash right now. I don't particularly want to be heavy in cash, but I'm really happy that I took a lot of money off the table. A lot of people are buying at these levels. If you look at your gold exploration stock portfolio, and I hold somewhere between 30 and 35 stocks. If I look at the 52-week highs on those and what they're trading at today, about 50%. Now, not all of them hit the same 52-week high at the same time. In fact, it was spread out, which gave me opportunities sequentially to take money off the table. But the gold exploration business is in toilet right now. People don't want to admit it, but geez, I saw some of the best intercepts that I've seen all year long. And if they would have been put out in August, September, October, stock would have went out the roof. Now it's just a selling opportunity. Stocks go down on really good news, really good drill news, excellent drill news. And the stocks go down on low volumes generally too. So
the liquidity is kind of left a little bit. Yeah.
And a lot of that had to do with that feeding frenzy. With $3 billion worth of free trading paper hit the market from September to October to January, and there's not been buyers for all that paper. I started talking about this in mid-May, and I came out full-blown on it by mid-June, and I wrote about it and talked about it all summer and fall, that this was going to happen. You just see that feeding frenzy. And once again, passes prologue. Same thing happened in 2008, 2011, 2016, a little bit more subdued, and now 2020.
Do you ever hedge your portfolio with like options? Like, do you ever go short the market with put options just to protect your loss? Or do you just move to cash?
Yeah, I moved to cash. I have never shorted a stock in my life.
Yeah, not a specific stock, but just the market as a whole, like buying puts on the S&P 500 to protect against correction.
You know, that's real. So I'm very focused in what I do, but mainly because probably I'm a geologist and mining analyst. I play these really high risk venture capital, resource exploration stocks, generally metals, but they can be oil and gas. They can be other weird commodities. But that's my speculative portfolio. I own a significant amount of physical gold, U.S. dollars, Canadian dollars, and then I have a significant amount of money in what you guys call an RSP. We call them IRAs down here, and that is a portfolio that plays indices, basically S&P 500. Some growth stocks, some large cap, mid cap, but I'm only in about 4 funds total, and that just manages itself in a good market like this. That's the returns have been tremendous. Because I play indices, I outperform the S&P 500 because that stock index doesn't give you dividends. My index fund gives me dividends, so I've exceeded S&P 500 for a number of years now. So,
do you think there's a commodity over the next couple of years that could surprise people? It could be a little bit of a dark horse that maybe no one's, or not as many people are.
I'll talk about 2 commodities. I am a permabull on copper, basically because copper. If you look at a chart of copper, world consumption, world demand, whatever you want to call it, since 1900, it's grown at an annualized rate of 3.4% growth per year since 1900. So there's lots of macro reasons for that, but more people becoming electrified. So copper, I don't think it's going to be any surprise that there's a dearth of copper projects, developable copper projects now, especially good assets. So that's one metal. I made a bold prediction on my first weekly market review show in January, whatever day that was probably January 5th or something like that. I can't remember. That the metal that would outperform all other precious metals in 2021 was going to be platinum. And since then, a bunch of people have gotten on the platinum bandwagon. I don't know well, that's not true. I do know as I think about it. One of my high net worth investors started talking to me, sent me his little white paper on platinum or told me he was doing it in mid-December and sent it to me in, I think, late December. And I looked at it and it makes sense because it's underperformed for close to 8 years now. Underperformed gold and palladium. Ratios way out of whack, and there was significant platinum deficit over especially last year.
So is the idea like a mean reversion, like a return to the mean, or is there like major fundamental reasons?
Well, there's some major fundamental reasons. The mine shut down, deep high grade mines in South Africa not being economic at current prices, shut down, and a lot of virus shutdowns in South Africa. But really the idea, the basis of the idea, and your prescient and your question is that regression to the mean. If you look at the mean, and we've got this huge economic and commodity database, something on the order of 50 megabyte Excel spreadsheet with 85 sheets and well over 1 million entries, and that would include data and derivatives that we've come up with. The mean historically since January of 1970, gold to platinum ratio, the mean and medium are right about 1.2, 1.3, 1.4. Means 1.4, and I think the median's 1.2, or vice versa. Anyway, 1.3. Current ratio is about 0.58. And that's come up significantly since March. If you look at the platinum to palladium ratio, the 51-year mean is 3, and median. Mean and median is 3. That ratio right now is, had it in the top of my head, about 0.47.
Okay, yeah, I have my chart. Can you see my chart?
Yeah.
I have it. I had it upside down for what you were here. Let's try that.
Yeah, right. Yeah.
There we go.
So I use platinum to gold and platinum to palladium because I like integers, big numbers versus fractional numbers or decimal numbers. So we always take whatever has the highest price over the long term and do the ratio that way. But anyway, so yeah, regression to the mean. I'm not going to say either of them is going to get to the mean anytime soon because it took them a long time to get this low. But it's got to happen at some point. Things return to normalcy. They get really out of whack. Pendulum swings one way or the other, and then you regress to the middle.
So there's gold to platinum.
Yeah,
it's 96.
We do platinum to gold.
Platinum to gold. Okay, I can do that.
Because historically, platinum trades higher than gold over that 51 years.
There we go.
Yeah, and look at it and see where it got. It got down to, what is that, 0.45 or something like
0.42. Yeah.
Yeah, and so you've seen the way at the extreme right end of that chart how it's recovered, but then look at where it's come from. Over, and I really can't see your years, but
96. I could go back farther if we wanted.
No, that's fine.
Yeah.
But you can see what's going on. So that's going to normalize. It may not get back up to 1.4, but it makes no sense to be in even at 0.58. I think is what it is right now.
Yeah, 0.58. Yeah.
Hey, my memory's pretty good since I talked about this earlier this afternoon. Here's a little plug. My commodities show for Kitco, my monthly commodities program, turned 11 years old today. So we've done almost 200 shows for Kitco over the years. And we talked the next show, which will hopefully be posted on Kitco tomorrow morning, is on platinum, talking about these various things. Mercenary Musings Radio, it's called.
Okay.
Congratulations.
Yeah, 11 years. That's cool.
Yeah, pretty good.
Yeah. So Mickey, I mean, you've been in the resource space for a while. What do you think? Do you think the decade, like the 2020s, could be the best commodities decade we've had in decades?
Well, I think it certainly could be. I guess I'm a little bit concerned right now with what the new president is doing in the United States, because for the most part, I like and followed, especially during the 4 years of the Trump era, U.S. plays, and I'm not sure how viable you just don't know what Biden's going to do. It's pretty clear that he's hell bent on destroying the U.S. oil and gas industry. Killed the Keystone Pipeline. That really hurts Canadians. I don't understand that. In order to kill the pipeline, in order that we can transport Canadian heavy oil by rail and truck. Now, how is that part of the climate change green agenda? Makes no sense. So, and so we don't know exactly what's going to happen to the metals. But we're long overdue for a major super cycle in commodities once again. It will be driven by China and the U.S. There's lots of metals out there that New Green Deal folks, or Green New Deal, whatever they call it, they don't really realize that all those things require lots of copper, require nickel, cobalt, lithium, rare earths. And you got to mine that stuff. And I hope that stuff is mined in North America, and we don't have to go outside this continent. I mean, you guys are our best buddies, our best friends forever. And you're resource rich. We get most of our resources, a significant amount, from Canada, and I hope that continues.
So you think oil's in trouble in the U.S.?
Yep. I think shale oil's in trouble. There's lots of things going on. He basically put a moratorium on new oil and gas leases, put a 100-day moratorium on permitting last week. Talked out of both sides of his mouth regarding fracking. I mean, U.S. is basically energy independent now. We're a net exporter of petroleum products now for the first time, I think, since 1970, 71. And, lots of LNG exports, lots of light sweet crude, because our refineries in the Gulf Coast need Canadian heavy oil because they're built for high sulfur, thick oils. We used to get a lot of that from Venezuela. That's gone. We used to get a lot of it from Mexico. Their fields are depleting very rapidly. We used to get quite a bit from Saudi Arabia. We don't want Saudi Arabia oil. We want Canadian oil, in my opinion. So I think, personally, I think U.S. oil and gas industry, if things continue the way the first 10 days of a Biden administration have, it could be really rough times for U.S. shale producers. I hope not, but
I've seen some folks conjecture on Twitter that, what happened in March when oil prices went negative. You saw kind of a flight of capital, especially in the shale oil plays, and the decline rates in all those oil fields are really fast. If you're not continuously drilling, the production falls off quick. And from what I understand, don't quote me on this, but once you stop drilling, it's not as easy to bring the oil field back into production, even if you wanted to bring the money back. They were kind of speculating that all of that supply destruction, in combination with the stimulus that you pumped into the U.S., that will eventually sort of result in demand for oil, that's going to end up causing an imbalance in this whole push for ESG, electric cars and stuff will end up ironically driving oil and even things like coal, like the most hated commodities out there, into, back into higher prices again. What do you think of that?
Well, it makes a lot of sense to me. And, You got to look at electric vehicles. they're not zero carbon footprint. You got to generate electricity. How are you generating electricity in the United States? Mainly natural gas. Used to be coal, but still a significant amount of coal. More and more natural gas because it's $2 and $2 to $3 a million BTU. We're so awash in gas, we can't give it away, except in the Northeast U.S. where they refuse to let oil come through pipelines or build new pipelines. So the world runs on oil. World's still going to run on oil, at least for my lifetime. You got to plug your electric vehicle into a current, and how's that generated? Well, more and more it's generated by solar and wind, which has been economic because of subsidies. Now, you can also argue oil and gas industry is subsidized, which it is. But the problem with solar and wind is the sun don't shine.
Car don't drive.
Well, anywhere average on Earth, the sun's above the horizon 12 hours a day. And so it can't shine more on average more than 12 hours a day. And that doesn't include clouds. So, I live in a very sunny place, and we get 70% in New Mexico, 70% of available sunshine. And that's really, really high.
Yeah.
And the wind don't blow all the time. So even in windy places, there's lots of wind turbines out here on the plains in eastern New Mexico, and especially in West Texas. And you drive through, and in the middle of the day, they're not all rotating to the right. I think they rotate to the right. Yeah.
I never
Have you
paid
ever
attention.
invested? Have you ever invested in solar? Anything solar related, Mickey?
No, or geothermal. I'm very provincial. I got my niche, and I don't really leave it very much. So, just really not my game. So
Maybe
I know I have my ways of making money, and as long as I'm making money, I'm doing what I'm doing. I'm pretty happy doing what I do.
Well, I think I might put something in your wheelhouse here, and it might be a good time to bring it up. Why don't we talk about uranium?
Yeah. Well,
speaking of energy, I was going to bring the same thing up. Uranium.
Well, and I know where you're going, and yeah, it's base load electricity, and that what I was alluding to with my rant about solar and wind. It's not it can't deliver base load electricity. You have to have base load electricity. California found that out this summer.
The hard way.
No base load electricity, and rolling brownouts, blackouts, etc. So the obvious solution for a more carbon or less carbon footprint. Now you still got to build the plants, and there's a carbon footprint to building everything. But in terms of generating electricity, nuclear essentially has no carbon footprint. Uranium's a tough nut. Well, the world's awash in uranium, and it's not always mined uranium. There's lots of other supplies of uranium that can be converted to nuclear fuel. Uranium stocks have gone up. They're up probably double.
Yeah,
over the
about
last
double.
3 months or so. I've been selling uranium stocks, taking money off the table because there is no fundamental reason that I can find right now for uranium stocks to be on this roll. This whole thing about the U.S. Strategic Uranium Reserve, which was passed out of Congress and will be in the next budget once the budget's approved, assuming they get a budget approved, $75 million. Trump asked for 150. Congress gave him 75. So let's do the math. At current price of 30 bucks a pound, more or less, that's 2.5 million pounds of uranium. That's 2 weeks of U.S. annual demand for uranium. We use 50 million pounds of uranium a year, so roughly 75 million. And that's assuming that the government buys it at 30 bucks. Well, no one's going to produce uranium in the U.S. for 30 bucks. They lose money. So you're going to need it probably 50 bucks for these companies to develop their ISR fields and go and produce enough uranium. It's got to be domestic uranium they purchase. So that's what, 1.5 million pounds a year, which is about 10 days of annual supply. And that's where Canada comes in again, because you guys got the best uranium deposits in the world and some of the cheapest mines. But Cigar Lake's shut down, McArthur River shut down because prices are too low. So at some point, price is going to catch up. And we know from this whole idea, once again, passes prologue, when the uranium supply gets tight and the prices go up, they will soar. They've done that before and they'll do that again. So uranium will have its day. I just can't tell you when that's going to be.
Do you pay attention to utilities stepping in and locking up contracts with producers as a trigger for the underlying asset to go up?
Yes. So most definitely, and to my knowledge, people have been predicting for years that the U.S. utilities, and once again, they operate in sheeple mode. The herd moves in, the herd moves out. At some point, they're going to have to start contracting, entering into longer-term contracts, which always tend to be higher priced than their current spot price. Can't tell you when that's going to happen. You know, there's lots of things that go on in the uranium business. Japanese are still dumping uranium on the market. I'm convinced. I mean, 10 years ago, pre-Fukushima, they had 54 reactors operating. Now they have 9, and they had contracts for all that uranium to supply those. Generally, utilities got about a good 3 years supply locked in at all times. And so you got that, you got uranium under enrichment, the Russians, got lots of factors that are outside uranium mining space. That said, I still hold significant positions in U.S. ISR producers and developers. And, you know, I'm taking some profits now, but that's just because prices doubled, you know. If I got a double on a stock I bought it at 50 cents and it goes to $1, I'm going to take all my money off the table. We sell half. My modus operandi. Unless I think that a stock has significant more upside and fundamental reason to think that, I generally sell half when a stock doubles. So taking some profits in uranium space lately.
So you're still a uranium bull, Mickey, just basically, you know, paying yourself right now and protecting your original capital. But
right.
You still think eventually it's going to go big.
You know, I was a uranium permabull for a long time, and I talked about it, and I was one of these guys saying, oh, in 2 years it's going to be this or that. In fact, when was it? Well, harking back again to 10 years ago, I was on Fox Business 10 years ago on my birthday, and my birthday is next Wednesday. And with Liz Clayman, the Market Close show, and I talked about uranium as the next big thing, and got lots of good press. And a month later, 5 weeks later, Fukushima happened. And within 6 months, I was back on Fox Business with Liz Clayman and promulgating the idea of giving talks on why I remain a uranium bull. So was I wrong?
Yeah.
But uranium, it really is the answer to all of our energy needs going forward. And
you can't have green without uranium.
That stigma that we killed 500,000 people, or how many we killed when we dropped 2 atom bombs at the end of World War II, and it's never not had that stigma. People are afraid of it.
I think more people are waking up to it and realizing like you can't have green without uranium. Like you need that if you're going to be solar and wind, that you need that uranium, right?
Well, you need baseload electricity. It's the obvious solution. Here's an encouraging thought from the Democrats. For the first time since 1972, which is 48 years, the Democratic platform is pro-uranium, pro-nuclear energy. So that green element does realize, there's lots of, Bill Gates is the biggest funder of small modular reactors in the world. Billions, I don't know how much, billions of dollars he's donated to develop small modular reactors. And really, small modulars are the future. Thorium's the future. We'll see if and when it happens, hopefully in my lifetime.
Do you ever dabble in explorers, developers outside of the U.S., or do you keep your focus in the U.S.?
Oh, I've been all over the world, mate. My focus over the last 5 years, has really been U.S. centric, and that had to do with political situation in the U.S. But yeah, I've worked and traveled in 31 different countries, and with one exception, I have never crossed an international border for pleasure. It's all been work. Now, that doesn't mean I don't go to places, but it's all been work related. And that one instance was the first time I ever went in the interior of Mexico, and that was many, many years ago. But yeah, so I've invested in plays all over the world, except really for Africa. I have Africaphobia, if that's the way you would say it. So I've never really chosen to play in Africa because of geopolitical things. But right now, I have a substantial position in a private gold explorer in the Kyrgyz Republic. So
Kyrgyzstan, okay.
It used to be called Kyrgyzstan.
It's not Kyrgyzstan anymore?
No, it's the Kyrgyz Republic.
Kyrgyz Republic, okay.
Yeah.
Sounds friendlier.
Yeah, it does. Somewhere I've written, I can't remember, maybe 10 years ago, I would never put my money in any country that ends in stan.
Stan, yeah.
But then the Kyrgyz Republic is no longer a stan, so. But there is certainly high geopolitical risk there. But this play is got all the markings of and the size of the next Carlin trend, and so you go where gold deposits are where they are. You go where they are. I have very much focused over the years in Latin America, specific countries. I'm conversational in Spanish, and I've spent, from what would it be, from about 1998 to 2008, or 97 to 2008. So 11 years, I worked exclusively in South America.
What's
There's a
your
lot of nice
favorite
deposits
district?
there. Oh, sorry, Carl, go ahead.
What's your favorite district anywhere in the world?
Nevada.
For exploration. Nevada.
Nevada. It's more than a district, but state of Nevada, the world's fourth largest gold producer, state of Nevada. So climate, ease of access, permitting, infrastructure. Couple of 3 years, probably 3 years ago now, maybe four even. Now 3 years ago, I wrote a piece on my newsletter, why Nevada is simply the best, which gives all the reasons. I think there were 10 or 12 reasons why Nevada is the best place to explore for gold in the world. I still opine that is true.
It's not that far away to visit either.
No, it's it's plane ride for me or a 2-day drive, but even
is it
from
that
New
far
Mexico.
for you? Oh.
Yeah, to get up to Elko, the heart of the gold belts, 2 days, 2 long days.
Oh,
it's be something. I got to think like a Canadian here. It's about, go to Las Vegas and then up to Elko is about 1,100 miles. That's close to a little less than 2,000 kilometers. So two long days of driving, but you can fly there pretty easy too. So.
Mickey, if you could speak to, say, someone that's just getting into the market for the first time, and they're trying to pick a sector. I always tell people, the market is kindest to people that can perceive where we're headed tomorrow and make decisions today. So if you were able to sort of guide someone newer into the market on focusing on a specific sector, what sector would that be?
Well, right now I think it'd be copper. Copper explorers, developers, and I prefer generally the safest, or let's put it this way, the highest risk reward profile are the advanced explorers, and so I'd be looking for good copper deposits and safe geopolitical jurisdictions. So for me now, more and more, it's the Americas. I got burned in various places. I got burned in ex-Soviet republics. I got burned in third world island countries. It's you just. I tend to be take a very conservative trading methodology and analysis to reduce risk in what I perceive as the highest risk markets in the world, which are these junior resource stocks.
On this note, Carl, there was a question that came in from the audience. We asked if anyone had questions, and someone had asked, if you're looking at a potential junior exploration play, what are the 3 most important things you look for?
Share structure, people, and projects. So you want a tight share structure. You want management that owns a significant amount of shares, so they are operating in their best interest and therefore your best interest. Pardon me. You want experienced people who have been there and done that before. I prefer technical guys, either geologists or engineers, as the CEOs, and until they get to the point they get into permitting and development, then you bring in geologists till then, and then bring in the engineers. And you want those people to not only have experience, but you want them to have been successful in their previous ventures. So, if someone is bankrupted 3 companies or rolled them back sequentially or gotten fired 3 times, then they're not really qualified to be called venture capitalists or entrepreneurs anymore. They're part of that shyster, charlatan sharks that inhabit any speculative industry. And finally, for me, it's the project, and I want project. Like I said, I prefer the advanced explorers because I think that's where you get the most bang for your buck, and safe geopolitical risk in districts that have proven gold deposits with proven geological models. And then more and more, especially during all these bear years we have now, we're in a pretty good market now, but you want them to have cash in the bank or the ability to raise funds without undue dilution. Most of these companies equity finance, so you have to. Dilution is really the bane of the juniors. So started out in my original, I started this business in 2008. Now almost to its 13th birthday in April. It was share structure, people, and projects, but those were really boom times. And then we got into the bad times, and I realized that the ability to finance without untold dilution is very critical.
So that requires timing, relationships, capital markets expertise.
Yep.
Yeah.
Yep. It's all about timing.
Yeah.
I wrote a piece about 9 months ago. It's something called, I think it's called If and When the Timing is Right. And really it is about timing. It's about getting in at or near the 52-week low. So, because all these stocks, with few exceptions, I challenge you to find a stock, an active stock on the on the venture exchange, a junior explorer that hasn't had a double or more in its 52-week period. They don't exist. So the key to it is buy when they're dormant, or they're not really, because you go in phases, so they're in between phases. You buy when they're low and you sell when they're high. And we sell, my newsletter, we tell everybody, and realize I speak mainly to retail investors, retail speculators is more like it. So don't get greedy. Sell half when the stock doubles, sell half your position, take all your money off the table. And if you pick them at the right time, you'll have a double within 12 months. And that's the goal of any stock that I write up, is we want to see a very strong possibility of a double in 52 weeks or less. And then you take your money off the table, you go and you do it again. We call it the power of two. You do it twice, you have twice the position, you preserved your capital 3 times, and 4, you do it 4 times, you have really quadrupled your position from your original position. You preserved your capital to do it again.
Mm-hmm. Mickey, I don't think you're a fan of the golden triangle, which I can understand. But would you say that there is significant opportunity to swing trade random golden triangle stocks from a chart perspective?
Well, I haven't really looked at that idea, but certainly let me preface my remarks by saying the golden triangle is one of the world's premier endowed metal provinces. There are high-grade deposits, mainly gold, but also good copper deposits. The problem with the Gold Triangle is it's so remote and the climate is so horrible. This is arguably one of the worst climatological zones in the world. You got all these deposits that are up in glaciers, and they're hard to get to, and they're expensive to explore. That said, there's some really good deposits up there. There's a couple of companies up there that are operating or exploring and soon to be developed old mines, old high-grade gold mines that produced in the past. But to go up there and find new deposits or giant porphyry copper deposits, I think that's silly. Whether you can trade those or not, I'll let you assess that, because I don't really play in that in that part of the world. It has tremendous potential to really issues up there: infrastructure, remoteness, and climate. So, my favorite play in Canada right now has to be the next mine, big gold mining in BC, or in that, let's say, Western Canada. I'm convinced is Barkerville. That's a tremendous discovery, and it's easily accessible. It's cold climate in the interior of BC, but that Barkerville district, or Caribou district, really is what it's called, is very well endowed, and there's going to be major mines up there.
Noted. John?
Do you ever, Mickey, dabble in some of like the major producers? Would you ever buy a Barrick, a Newmont, just to get to capture some of the industry momentum? And then,
so the way I play that goes into the a speculative part of my how would I put this, of my retirement sort of assets. So I have a significant chunk of change in a gold mutual fund that is very focused on mid-tier and major gold producers. So versus playing one, I would rather play the sector for a period of time. And I moved into this fund within the last few months because I thought that gold and the gold miners are going to do very well, and they should, with gold at, what is it today, 1840 more or less today. If you can't make money as a gold miner at 1840 gold, then you ought to pack your bags and go home. So, but just based on the idea that gold prices were high and costs have not yet caught up. Now, that's not saying that costs will, I'm concerned about input costs, and most mines' input costs, the highest input is labor and energy. Energy costs are going to go up. There's no doubt about that. Oil's at $53. That's still pretty cheap compared to the $100 it was during the last big boom we had. But as long as input costs remain relatively low, I like I wanted money in the major and mid-tier gold miners. I didn't want to have to watch and play individual stocks. I do enough of that in my junior portfolio.
Juniors, okay. So when it comes to the majors,
I'd probably rather go out and feed the cows than research if I think Newmont or Barrick or go throw a line in the water or pull out my crossbow or go put some meat on the table, Yeah.
Well said.
Gotcha. Yeah, that was a question that came in.
So I'm positive on the gold miners, but personally, I don't want to have to do the due diligence and to buy and sell the stocks. So I do the easy way out, and I'm in. I can't remember what fund it used to be. An Oppenheimer fund, and I can't remember. It still have an Oppenheimer symbol, but it's their mid-tier and major gold miners. So
Mickey,
and for me, I think the gold market, I bought this with the idea that that the gold market's going to be good for at least a year, and I can exit. I bought C shares, so I can exit in a year with no load on either side. And I figure, well, I'll play it for a year, and if it pans out good, and if it doesn't, I'll sell it after a year and go move into something else.
So, Mickey, I know earlier in the discussion you had mentioned you thought, gold, based on comparing the chart over the last 2 years to comparing the chart in, 2011 area, there was some similarities. But assuming that doesn't play out and we don't get another 2013 type move.
I hope we don't. 2013 to
If we get
2015.
if we get the opposite, if we get gold picking back up again, what do you think? What do you think would catalyze that? And do you have any feeling on when the timing for something like that could happen?
I don't really have a feeling for the timing because the last year has been so anomalous. We do all the seasonality of gold, and last year just blew out all seasonal factors. Normally, gold would be rising. Normally, gold in any given year over last 25 years, gold has its biggest run up from November 1 to the end of February. And actually, most of that is from mid-December till the end of February. And we got charts that show that, normalized charts over 25 years, where we take every year and normalize it at the beginning of the year. There are lots of macroeconomic reasons why gold should perform well. All this fiat money, current creation worldwide, low interest rates, zero interest rates, and a significant part of the world, especially in Europe. And in terms of real interest rates, negative rates worldwide, I think. So all these safe haven demand, geopolitical risk, you add all these reasons, and there's lots of reasons to think that gold should go up. But then you look at the charts and you go, well, that's the other side of the story, so we'll see. But overall, I remain, no matter what I said and what I'm going to write, I just asked the question. For my subscribers, and it's easy to become a subscriber. It's free, so the price is right. They'll see that on Carl's chuckling there. You see that on they'll see that on Monday, and I'm just presenting. Well, this could happen based on charts. Food for thought.
Yeah, it's an observation, right?
Topic for discussion. Yeah. And I pull out that old Mike Myers thing from Saturday Night Live, Linda Richmond, talk amongst yourselves, if you remember that. So it's just food for thought, topic of discussion. But overall, I'm bullish on gold. There's so many reasons, only 2 or 3 I went over, why I think gold's going to perform very well going forward.
Do you think
got ahead of itself?
Yeah, it got ahead of itself.
Got ahead of itself in September of 2011. When markets go exponential, they go parabolic and they come back down the other side. And we saw that in gold spikes in 1980. We saw that in a gold spike in 2011. We saw it in the gold spike in 2020. At 2063, 2050 plus for gold, it's not sustainable and up too high too fast. And a lot of that was the hedge funds, and the banks were massively long on gold. And that's the thing right now that is encouraging. Those same entities are still very long on gold. Look at Goldman Sachs and JP Morgan saying how strong they think gold will be in 2021. Well, they're doing that. They're talking their own books. That means they're long on gold. Goldman Sachs didn't come out and give you a bullish gold price unless they're long. They're talking their own book. They're trying to encourage people to follow them in the market.
Thought leaders.
Yep. We all talk our own books. We all want followers. Even those people on Robinhood, playing Gamestop. That would go nowhere if they didn't have a guru that was telling them, this is what I've done. You got to do this.
Yeah.
It's the way human mass psychology is, as Mr. Dines likes to say.
You
all
just
about mass psychology. The original gold bug, Mr. Dines.
Yeah.
What a character. Smart.
I don't think we've talked about silver. Why don't we talk about silver and then we'll leave it there?
Yeah, so I published a piece speaking of silver last week, or actually, I guess it was Monday it came out, Monday. And the title, I got to remember the title. It's, well, hang on a minute. I'm going to look at the title so I get it exactly right. Because I write alliterations. I love alliterations. So lots of my titles are alliterations. So bear with me while my slow computer. There we go. Okay, the title of it came out on Monday was Silver Since the 70s Shows Classic Speculative Cycles. So I show how silver went exponential and parabolic in 1980. It did the same thing in 2011. And then we've got this big rise in silver right now. And I'm not really a silver guy, not a silver bug. Silver got way out of whack this summer when gold ran up, or actually it was in March. Fell to $11 at one point when gold took that dive to 1473. Gold silver ratio was 124 on one day. Well, it never been above 100 before this whole pandemic thing started. So we knew it would catch up. It's in the low 70s right now, which is way above the mean and median, which is about 55 to 58, somewhere in there. But it is within a normal range. So it's small market, it's low liquidity, it's mainly an industrial metal, not a precious metal, but it will act as precious metal at times. We know because of the small market, it's always more volatile on upside and more volatile on the downside. Buying silver in March and April and May and June made a lot of sense. I don't think that buying silver makes a lot of sense right now. Problem with silver too is it's such a small market. The markups on what a retail investor would be they're ridiculous. I don't know. Silver price right now is $26. Is that right? 26.20 as we speak. I doubt if you can buy a silver coin for less than $30, or even a bunch of silver coins. So the markup's really high, and it's the price you pay for it, not the spot price. Markups tend to be much less on gold.
So yeah, that's fair. It's a big percentage markup.
Yeah, very high percentage markup. Good way, succinct way to put it. I own some silver coins, not a lot. They're pretty, very pretty. Gotta keep them in their little sleeves, otherwise they tarnish. But gorgeous coins. Chunk bag of silver. That's always a good thing to have around, because if we're in economic collapse, the theory is that you can use silver dimes and quarters in the U.S. at least to barter, and that makes sense. But if you're a real big silver fan, you buy it when the ratio is out of whack, and then when the ratio gets normalized, you sell it and turn it into gold, because gold's money. And I've written pieces. Silver's not money anymore. Silver hadn't been money for a very long time. Last remnant of silver as money was in 1964 into 65, when they quit making silver coins in the U.S. It's really not been money since then.
I said I was going to bring up silver and leave it here, but I got to ask you, what do you think of Bitcoin?
Well, it's the most speculative, volatile market in the world, and it is not money. Absolutely not money. And the volatility is just too much. When that whole thing happened a couple of weeks ago, and the riots in the Capitol, and then the Biden inauguration, and the run up in Bitcoin, it ran up to $42,000 a Bitcoin at one point, and 2 days later it was back down to $29,000 per Bitcoin. So how do you play that market? How do you make real money, or even US dollars that you can turn around and buy gold? How do you do that? I don't know. That sort of volatility is something I personally don't want to play in. Now, if you bought Bitcoin when they traded for less than $100, I hope you took a bunch of money off the table, and I hope you still own a few Bitcoins. There are a lot of Bitcoin billionaires that got busted in that last time. It ran up to 19,000 and came back down to 3,000, 3,400, I think. A lot of Bitcoin billionaires all of a sudden became Bitcoin millionaires. So, you got to sell. You got to sell stuff. When markets get really frothy and when markets go exponential, you need to sell. Probably one of the most successful stock market players of all time was Barney Baruch. He was a New York guy, but he invested very early on in the Ontario goldfields in the 20s, and then went out west and put money into BC goldfields. He's famously said, "I made my money by selling too soon." I think that's some of the wisest investment advice I've ever heard. I made my money by selling too soon.
Yeah.
Take profits. Don't get greedy.
Yeah. Well, I'm going to share my experience with our followers over the next year, because the first 3-4 years of my career in investing, that's probably been my biggest mistake, was drinking the Kool-Aid.
Everybody's.
Yeah, and then you understand.
I haven't done it.
Yeah, but once you get past that hurdle, that's when you start making money, and that's when you start, all these opportunities. Once you understand, I'm going to sell in the strength. Actually, John was someone who hammered that home with me. John's been a mentor for me in my career, and he's always said, sell into strength, sell into strength. So even still to this day, people that I consider thought leaders, I'll share my portfolio with them and say, you got a good knack for selling stocks at the right time, so I'm going to share this with you. Will you let me know if you think I should be selling? But yeah. Well, John, anything else for Mickey?
I had a question that popped in my mind a second ago, but I've lost it now. Maybe the rise got to me. I don't know.
Well, I think what you're saying, Carl, is you need to be a contrarian. I'm an unabashed contrarian. When people are buying, I'm selling. That's what I did this summer. I was selling when everybody was buying. And when stocks are out of favor, companies, sectors, nobody wants them, that's when you need to be buying. So if Rick Rural likes to say, if you're not a contrarian, then you become a victim, and really it is true. So
that's what I've learned.
Yeah,
I just thought of my question.
Don't follow the herd. Don't be a sheeple. Be a people, not a sheeple. Buck the herd.
We need a T-shirt. We need some T-shirts.
Mickey, I just thought of my question. It was
if you make those up, I want one.
Yeah. Well, you get a royalty.
Do you
maybe a finder's fee?
Yeah.
Whenever if you go into a stock and it moves against you, do you ever cut it based on fundamentals, or do you cut it based on, I'm only willing to lose a certain percentage of my investment, whatever that is, say 20%, 10%, whatever, and say once it hits that, I'm out, doesn't matter. How do you, when it comes to your losers?
Yeah, I'm kind of bad about that. I'll sell stocks if the reasons that I bought them have changed. But if they've really gone in the toilet, all I do is I save them up for tax loss selling when I'm making money. So,
So you hold them.
Yeah, if they're beyond repair, I just hold on to it and figure, well, when I need to burn some profits in a year or two and reduce my capital gains, I'll do that. So I'm playing the tax game.
Yeah.
Yeah. So I sold some stocks last year because I did pretty well in the market. I sold some stocks that I had held for quite some time and were way underwater, and then they roll back and they're pennies on the dollar on your cost basis, and it doesn't make any sense to sell them at that point, or a lot of times it doesn't make any sense. So sometimes I hang on to losers too long, but I'll give you an example. So there was a stock, and sometimes they come around. There was a stock I bought during the height of the market in February of 2011. We went into a private placement in the feeding frenzy. We being a group of strategic investors I've been involved with for quite some time. And we bought this stock at private placement is at 35 cents. And by the time it closed, the private placement stock was at 50 cents. By the time the 4-month hold on it was off, it was at 25 cents. So we were all underwater by the time we could trade it. And this was from February of 2011 into May or June, into May, first part of June. And I liked the projects. They were Nevada and Mexico as a prospect generator. I hung on. Pretty soon the thing was down to 3 cents.
Wow.
And December of 2015. And they had moved into a play. They'd moved out of Nevada, moved out of Mexico, moved into Scandinavia. And they had hired a couple of guys to kicked out the CEO or busted him down. And I sold that stock started selling it when I got my double within the next year. Remember that run up in 2016 when everybody went nuts for gold? I sold my last tranche at $2.99.
Wow.
Wow.
And I almost tax loss sold it at 3 cents, but I made a call to the guy and he goes, "We got some new guys coming in. I really like this play. You might want to hang on." So sometimes it works out, guys.
There you go.
Absolutely. Yeah, I've had a few of those myself, that's for sure.
Yeah.
Maybe not that much of a recovery, but awesome.
Yeah.
Well, Mickey, where can everyone follow you?
Website's called mercenarygeologist.com. We produce on average about 200 pieces of content every year, including podcasts like this, videos, speaking events, newsletter, etc. And if you want my stock picks and if you want my newsletter on a timely basis, you got to be a subscriber. But I run a sponsor model, so subscription is free. So all you have to do is sign up, go to the website, mercenarygeologist.com, click on the banner below my mugshot, give us a name and an email address. You can fake your name, but you got to give us a working email address, and you will get access right now to 4 newsletters that I have published in the last month. And we've got another one coming out on Monday that I've already told you about. And then Twitter, at Mercenary Geo. We have a lot of fun with our Twitter feed. With the Twitter censorship that's happened in the U.S. over the last 3-4 weeks, we've gone from well over like 50,500 followers, and now we're down to well, let's see what we're down to today. 49,800 and change. So we have lost 1.5% of our Twitter followers. They've just gone off the map. They disappeared. They went into the Twitterverse. Banned. Presumably they were banned by Twitter. So I don't know.
Well,
but
everyone,
we have a lot of fun with that.
Go and follow Mickey. He's a great guy and obviously a thought leader in this space. And he's done well. And I enjoy all of your articles and doing podcasts and interviews with you. And I'm sure we'll do more of them and catch up with you. So thanks very much for joining us.
Yeah, it was
Thanks
fun,
a lot,
Mickey.
Carl. Thanks a lot, John. I hope the next time we do one of these, well, maybe not the next time, but I want to get in that car with you and drive around downtown Vancouver again, Carl. So
Absolutely.
yeah.
Well, I can't wait to see you in person because that means that we've got past this pandemic, my friend.
Right. And, you know, I haven't been to Canada since PDAC, and I actually have a part of a condo in downtown Vancouver where you picked me up that day.
That's right. Yeah.
Oh,
And then we had dinner. We had dinner with Terry Lynch.
That's true. Save Canadian Mining, and they've had some positive developments there, and we wish them very good luck going forward to that, to try to kill this naked short selling in Canada.
Yes, sir. All right. I think that's a great place to leave it there.
Yeah.
So
Thanks a lot, guys. I appreciate it.
It was fun. Thanks, Mickey. Cheers.
Have a great evening.
Okay. Bye.
Bye.